Hey, good morning. This is Mayor Valensky with Driving Markets. Usual warning, anything said in this piece is simply a opinion only for media publication, and it is not financial advice, not investment advice. Any losses or profits that you make is on your account. Anyhow, so let's get going. So the Fed raised interest rates by 75 basis points yesterday. The Fed is the central bank in the United States of America, and they raised it by 75 basis points, which was expected. In fact, I actually stated on YouTube they're going to raise it by 100 basis points, but there was a small outside chance that was going to happen. Most of the market expected a 75 basis point rise, and that's what they got. However, the following on statement from Jerome Powell, when he gave over the reasoning behind it, frightened the markets, and that sent the Dow down 522 points, sent the Nasdaq down, the S&P and global markets down, and the dollar up. I mean, the dollar against the pound, for example, is like 112, 112.50, which is just crazy. But anyhow, let's get back to interest rates. So what he said, that they're going to be aggressively fighting interest rates on an ongoing basis till they get inflation down. Until they get inflation down to 2%. He said there's been no change since the Jackson Hole symposium, when all of the economists, the bankers, the analysts got together around about 2 or 3 weeks ago in Jackson Hole, Wyoming, and there they stated that they're going to fight inflation aggressively and raise interest rates. Now, what they did say, what's likely to happen by the end of the year, there's going to be probably another 1.25% to 1.5% increase in interest rates by December. So if you look at the YouTube's Driving Markets, my channel back in January, I did say then specifically that interest rates in the States are going to be around about 4 to 4.5% by year end. At the time I stated that, back in January, February and March, everyone came out and started passing comments. What are you talking about? It's extreme. It's not going to happen. We're going to go to maximum 1%, 1.25% maybe. That's all that's going to happen. The economy can't take it. And we are now talking about 4.5%, 4.25%, 4.5% by year end. Now, 2023, they're saying, interest rates will max out at 4.6%. Wrong. Interest rates are going to go to 6.5% in the States in 2023. They're going to rise maybe even higher, but I reckon they're going to be about 6.5% in 2023. The impact on the economy, and also Jerome Powell said of the Fed that he knows that could have an impact on the economy. He knows that could push us further into recession, but he's still taking the stance that they've got to fight inflation, because that is the main battle at the moment that the Fed is looking to fight. Now, just going a little bit onto bonds, look at the 10-year and 2-year Treasury. If you recall on previous chapters, I've said to you that at the moment the 2-year bond, the 2-year Treasury is yielding more than the 10-year Treasury, and that is a lead indicator when it comes to recession, and that's exactly what's happening at the moment. We've got a massive gap between the 2-year Treasury and the 10-year Treasury. The 2-year Treasury is yielding 4%. And the 10-year Treasury is yielding 3.5%. That's a 50 basis point difference. That is a huge gap. And that is a lead indicator that we're going into a recession, because they are inverted, where the yield on the 2-year is returning more money than the 10-year. It should be the other way around, but that is an indicator of recession, and likely to happen very, very soon. So the fact that recession is going to happen is more or less guaranteed. Even the big banks and the economists are now talking about no soft landing, talking about a hard landing when it comes to the economy in the US. Also, the German Bund bond, I said earlier this week, is inverted, where the 2-year is higher than the 10-year. Again, a lead indicator, same lead indicator, only that's happening in Europe. So Europe's actually going to recession. So keep an eye on that. The dollar is very, very strong, very strong. But oil was up yesterday slightly, because there are concerns about supplies, and therefore oil pushed up a little bit more. The Nasdaq was hammered. You can expect, as I said over and over again, you can expect shares like Apple, Amazon, Netflix, Facebook to drop further. Any tech stocks that are not making a profit are just going to go down significantly. I'm not a big fan of Facebook, so I'm calling Facebook well below $100 by at year end. We've only got a few months to go, but by year end. Also Apple. Now I've said Apple has not come out with anything new, innovative in the last 10 years. And then I got bombarded on Instagram and bombarded in YouTube on and WhatsApp messages saying, what are you talking about? Apple is a massive profitable company. They are profitable, but they are cash cowing. They are just looking to charge more and more money to their existing loyal client base. They are charging for chargers. They're charging for apps. They're going to take money out of your pocket just to hold an iPhone. But the actual iPhone's not changed in over 10 years. I've stated this before. Look at Netflix now. Moving to Netflix. Netflix has lost its direction. It's not really going anywhere, and that's likely to go down further. Facebook is fighting a very tight market space, likely to go down further. So all of these high techs will be battered. Talked about cryptos. I'm talking Bitcoin now, all the way down to 10,000. It's going to go down to 10,000. It's going to break all the support levels. Bitcoin is going down to 10,000. That's absolutely sure. Odds on favourite there, and the other cryptos are going to be pulled down with it, considering that is the market leader. In the UK today, you've got interest rates rises. They're going to be a minimum 50 basis point rise in the UK, and more to come. Mortgage rates are going to go up. House builders in the States this week have complained and noted that number of inquiries has dropped down significantly. The cost of housing is too high and likely to be a correction there next year. So interest rates are going up, inflation is going up, cost of living, as we all feel it, is going up. The pound hopefully will go up, because I think it's reaching very close to a bottom, but so far been wrong, because it's now 112.5. Hopefully that will go up and give us a bit more value. This is Mayor Walensky with Driving Markets. Subscribe, send to your friends, add to your favorites. Have a good day.